Continue to point out if we have bottomed last Friday around the 20-week moving average, the VIX is turning off of this trend line here in the weekly time frame. Stochastic's trying to roll over. We'll see what it looks like by the end of the week, but we are turning down off of these trend lines I've talked about here in the weekly time frame. And if Friday's low can hold with the higher low today, or if we even go back and go beyond it and form a divergence, we still may begin to try to form this bottom around the 20-week moving average. Will take us back up to the gap fill at 5,200 or to the low 5,300 for a higher high, a new all-time high. Now, the VIX was down today, had the market gap lower and then continued to sell off sharply, but it rebounded, and that gave the VIX this topping tail. The VIX opened and it surged, but then it ended up closing down by 3.76%, down to 15.37. Even though the S&P was down, well, so was the VIX. Now, again, if the S&P is just getting a smaller counter trend and there's still more work to be done, it might be that we end up seeing the VIX come back up and make a lower high, and the S&P making a lower low and forming a diversion. So that is still very possible if we don't claw our way back up to 5,200 right now. But this is just a counter trend back up to the 20-period moving average and the 50 as they get a bearish cross. Like I said, if this is going to be bigger, we've got to be, and we're not just going back to fill the gap directly overhead, but we're coming back up towards the gap fill and maybe the 20-period, be able to clear the 20-period moving average and the 50-period on this chart right here. If we're going to get a bigger rebound back up. So I'll be watching the VIX. Do we get traction back up? And the rally ends up still fizzling out and the low's not in yet? Or did we establish a higher low now and we begin to build upon this? Signals all begin to turn bullish, remain that way, not just bullish for a day or two and then turn back to bearish, but they remain that way and we begin to get a bigger a rally. I'll be watching the VIX because, again, if we just have a smaller counter trend on our hands, the VIX could still go up and, again, test this high as the S&P tries to move to a lower low. Oftentimes, the VIX will bottom or top before the S&P bottoms. Here we had this black reversal bar. While we were bottoming here, we'll be watching, see if, and that's when we hit our 20-week moving average, by the way, which was last Friday. So we're watching to see if that low is going to hold. And trend signals continue to remain bearish, but the earnings, we'll see if they try to turn back to bullish, meaning we either have a powerful counter trend or establish a bottom. Talking about that in this video, but just want to quickly show you some of these signals bearish at this time. So I'll be watching to see if some of my signals begin to try to turn back to bullish or if they remain bearish. Again, daily charts on the S&P 500 cash and SPY, the moment still bearish, but we are trying to rally in after hours. Now, if you watch the video all the way through, you'll see that directly overhead is the 50 and the 20-period moving average on the S&P 500. That's also VWAP resistance there as well. So again, if we do climb higher here, filling this gap, again, directly overhead is the VWAP resistance. So the gap fill is way up here. Again, the gap from today, trying to fill that there. We are filling that in after hours. But again, you've got that gap to contend with here, clearing this level. Yeah, the gap way up here at 5,200, 5,199 to be exact. But VWAP resistance there and surrounding our 20-period moving average in the daily time frame. Something to pay attention to. It's the VWAP resistance going back to the all-time high. But signals still bearish. We'll see if they remain that way by Friday's close. Stalling right there at critical mass in the daily time frame. So we'll see if the rally can continue and hang on futures once we get that PCE data. The market opens on Friday. But the trending candlesticks did turn bullish at the very end of the session with the rally here, bearish for most of the session, and then once we neared the highs of the session, it flipped back. So again, some signals trying to flip here. See more signals change if that's going to be the case, if we're going to establish last Friday's low as a bottom. Now here we have momentum still bearish, and the trend is bearish. Having broken the bullish trend here, we're going to bottom. That's got to change. Then the bar's got to flip back to blue. We got to see signals begin to change here. The one-day trend has a sell signal. here. The micro trend has a sell signal still at this point. They turn bullish back over here together. They turn bearish over here together. So again, trading models will have to change if we're going to establish a bottom. Short-term trend and the short-term momentum, again, both are still bearish here. Watching to see if these signals begin to change or not. Directly overhead, we have our 20-period moving average. 50 that are about to get a bearish cross. Again, most signals are bearish. Again, here we got rejection off the rainbow cloud yesterday with the hanging man candlestick. Swing trend line is still bearish and pointing down here as we're turning off the rainbow cloud, and the balance of power is still negative. But as you can see right here, we had the rally lower, or I'm sorry, the sell-off lower and the rally back up, moving towards a gap fill, which we're filling in after hours right now. The momentum line here is turning back up with that rally, bouncing off of last Friday's lows and trying to get a higher low, at least so far. So again, I'll be watching to see if my signals all begin to turn back to bullish. Right after the top, the momentum line turned bearish, the swing trend line right after that, and we got the sell signal with the bearish engulfing here, validated with the balance of power going negative. So I'll be watching to see if my signals, which are mostly still bearish, any candlesticks is trying to turn bullish. Here we're trying to turn up. Again, this could quickly turn right back down, though. It could turn up and then quickly turn back down, showing short-term momentum. Your swing will happen upward if we clear the rainbow cloud and the swing trend line, and they begin to turn back to bullish with the balance of power going bullish here in the daily time frame. If you like the indicators, you like the charts, please let me know that by supporting the channel. Follow the link below to take you to a secured site. You can donate any amount you want, get a recurring donation, but please consider helping out today. I don't have any sponsors because I don't want to sell you a bunch of stuff you don't need. Just ask that you partner with me by helping out by supporting the channel. If you can step up to the plate and do that, I would really appreciate it. Just follow the link below to take you to a secured site, and you can donate any amount you want. I thank you for your consideration for that. Again, just showing some of my indicators here. Again, signals still bearish for the most part. The bearish reversal of conditions. Watching to see if that changes or not. Earnings as we try to move towards the Fed meeting, and with the PCE data tomorrow. Big rally in after hours, but can we close that way? We're just going back up and filling the gap. Clear the 20-period moving average, S&P, and the 10 on the Nasdaq. Again, momentum still negative here. Signal still bearish here. Critical mass cloud still bearish. Warrant of distribution at the top. That was followed by a sell signal. We do take out Friday's lows. Again, we still may see more accumulation if we try to form a divergence very similar to what we had down over here and down over here. We could establish last Friday's low as a bottom. Signals all begin to turn back to bullish and remain that way. So I'll be looking for clues because, again, I think eventually we are going to go back and fill the gap at 5,200. Do we do it sooner or rather than later? Or do we have to go down further before we get any kind of meaningful bottom? And critical mass cloud 2.0, again, still bearish. Red bars in the lower portion of the red cloud, halting at the critical mass line in the cloud, at least so far. Critical mass oscillator in negative territory. Now, in addition to earnings and PCE data tomorrow and the upcoming Fed meeting, I'm watching the 10-year yield. It's popping higher. Again, that could, even with good earnings, or getting in after hours, could still rattle market tomorrow. If we get the PCE data, again, we could still come up and try to hit this upper channel line. Again, I'm watching to see if last Friday's low is going to hold or not, or is there more work to be done in forming a divergence. Again, rally up. You've got the 20-period moving average in the daily time frame and the 50 directly overhead on the S&P 500. So again, I'll talk about that in this video, but just be aware that this is moving higher, and tomorrow we're going to get the PCE data. If it goes higher, again, the rally could fizzle out with just filling the gap or stalling at the 20-period. Want to go higher, we've got to clear the 20-day moving average. Low at the 20-week moving average is going to hold. 10-year up another 1.16% today. Friday's lows do not hold. It's still possible that we see these stocks above their 20-day moving average on Nasdaq here and S&P, that they move back down and we get a a higher or a higher low on the indicator and lower low with price. That is still possible if we cannot hold above the 10 period on the S&P daily and clear the 20 period moving average there in the daily time frame. That's what has to happen for a bigger bullish scenario. You got to clear that 20 period moving average. Same thing here on S&P. Stocks above their 20-day moving average rising up after single digits. Well, we saw that here at the first October low right there, but then we came back down and we went to a lower low. Do we see something like that again? Again, I'm looking for a bottom, possibly around our 20-week moving average. We still may try to move beyond it. You might form some divergences like on the RSI in the daily time frame and here on stocks above their 20-day moving average on the S&P 500. Sometimes extremes mark bottoms. That's it, but other times divergences do form. So something to pay attention to. We can't clear the 20-day moving average, which we're rallying up towards it at this time as it's now about to cross the 50 period. After hours, futures is having the 20 cross below the 50 period, and we're still not clearing that level. So just something to watch going into Friday's close. I'm watching Friday's low because it hit this 20-week moving average and moved just slightly below it. And I told you, again, we could come back to it and get a higher low. We did that today, or we could go back down and try to form a divergence. But I'm looking to see if we try to bounce around the 20-week moving average. I told you that, again, the market could form a top that would look like this, where we just start selling off and taking out the 20-week, or like this, where we come down to it and bounce off of it, and you get a higher high or a lower high, and then you begin to sell off further. An overall topping process. So again, I've talked about this scenario, and that I think we're likely going to get this bounce, as I said last Friday, off of the, and even before that, I was looking for at that level to be tested and to bounce off of it. Again, that 20-week moving average, as you can clearly see, acts as support and resistance, all these blue and red arrows. You got a really good shot of trying to find a bottom here. And with the gap lower today on, had futures down with the meta guidance going forward after hours yesterday, and then we got the recovery of futures, but then we sold off even further, gapping down sharply with the GDP that came in weak. Concerns about weakness in the economy. I told you eventually we were going to see that happen, and again, ultimately we're going to see it go negative. We got that black candlestick yesterday, that black candlestick forming a hanging man candlestick, and I told you that that could be a short-term top. It gave us a sell-off, but so far we had an intraday sell-off that's getting a recovery in what potentially could be a gap and trap. We always want to watch gaps. You get a gap and go, a gap and fill, or a gap and trap, and I'll show you on the 5-minute chart real fast. But we did get a hollow red candlestick, which often is bullish, and after hours we're getting the earnings, which are positive, and we're seeing the futures sharply rise on that. And you got the 50 up here, you've got the 20 period moving average. We talked about that, in the 200 in the 60-minute time frame. I told you, again, if we've established a bottom and now a higher low, we can get a bigger rally towards the 5200 area to come back and fill this gap up here, or even move to new high. The move is not done yet. We can get an ABC type of a structure up into the 20 and the 50 period moving average, and then get one more dump and then attempt the recovery either for higher, higher highs. So those are the scenarios that I've been talking about. But again, signals have remained bearish. Earnings, they very well could turn back to bullish tomorrow. A lot of signals will be watching the 20 period and the 50 period as their bearish realignment. The 20 is now touching the 50 period. Let me just bring that up. But wanted to show you this black candlestick again. It did play out, but so far only on an intraday basis. We'll be watching. Now remember, the rally could fizzle out. We get a sell-off with the PCE data that's going to come in before the market opens tomorrow. So we'll be watching. Right now we're rallying up big on earnings. Big names. I told you we have Magnificent 7 stocks this week. Let me just show you a couple things and then briefly look at the earnings real fast. Again, we turned down, we came down, we filled this gap right here. We formed our bullish falling wedge. This very well could be a bottom, and we could rally back up, try to build a rally up to 5,200 off of the 20 period, or even up to a new high to above 5,300 to hit the upper boundary of the channel. showing you on the weekly chart. Now, it's also possible that, again, this is just a move back up here to the 20-period moving average and the 50 as they get a bearish cross, and we're not done, and we got to get one more push lower. And that could be, if we have a five-way push lower, that is possible if we're going to end up getting a rally back up to eventually fill this gap and get a lower high. Now, it is possible, again, that the move is done here and that we're already starting the counter trend move, and we blow right past this area and we move earnings, or even with the Fed, up to try to fill this gap. Elliott wave is speculation, so that in mind are various possibilities. And again, it's also possible that this is an ABC type of a move, and we're now starting a final push higher that's going to take us above 5,300, above this high, as I've talked about, for a topping process, but up to that upper channel line. So there are some different possibilities, but like I keep saying, if we can get above the 10 period, which we're trying to, hold above it, starts curling back up, then again, odds increase that we have a bottom and that we're going to try to either rally back up for a lower high or a higher high. The other possibility is that this bearish alignment, and again, the 20 is about to cross below the 50 here, gives us a bigger push down to end up forming a divergence on the RSI. So we'll be watching to see how it unfolds. But again, signals remain bearish, but they could turn. Earnings that I've been talking about, I've talked about a clawing our way back up on earnings. On Friday, I talked about the bullish divergences that had formed, and again, that we could form a bottom around that 20-week moving average. Divergences played out. We ended up forming an inverse head and shoulders. We got a little a gap higher on Monday and a pullback for an inverse head and shoulders, and we saw that break out, continued higher, and we began to form this channel here. Eventually, that broke down with yesterday's highs, and that gave us, remember, we had the gap higher at the open. We sold off, and then we went back up, and that ended up forming the hanging man candlestick that we got. Then we gapped lower today, formed a bullish divergence on the 5-minute chart, and again rebounding back up currently at the 200, and after hours we're coming back up and filling the gap and going higher. The futures, S&P futures right now is moving just above this area right here, moving towards the 50 and the 200 as they're about to get a bearish cross. So we're seeing the futures jump up and moving just above. Right now we're just above this area here. So we'll be watching the 20 and the 50 and the upper end of the cloud right here. But we're jumping on positive earnings. So that's taking the S&P back with futures back up to this gap area and overthrowing it and coming up just above this area here with our intraday highs from the previous days. So again, the gap and trap. Now again, just say this, you always want to watch a gap. You always want to watch, you get a gap and go, a gap and fill, or a gap and trap. A gap and go is this, where you gap higher and you just keep going in that direction. A gap and trap is this, where you gap higher and you move in the other direction. And that's possibly what we could be getting here, or a gap fill. This was almost a gap fill. We didn't quite do it. We did it on the intraday bar there, but we didn't do it on a closing basis, and we came back and tried to fill the gap there. Close but no cigar, but that's what you would usually see with a gap fill, where you gap higher and you fill the gap and then go on your way in the direction of the gap. So we did fill this gap here today, and that was possibly a gap fill now, or a gap and trap, where we gapped lower and then now we go in the other direction and establish a higher low. I'm watching to see, do we establish this as a bottom, which we tested, just moved slightly under our 20-week moving average, but closed above it with last Friday's close. So we're watching that area closely. If we can begin to build upon a rally with earnings, move to the 5,200 area, the gap fill, which is not this one, but on the 60-minute chart, the one that is higher levels, which if I bring up the 60-minute chart, you can see it directly overhead. We have the gap fill that we're trying to fill now that we are filling in after hours. occurred, not with because futures gapped lower, pushed down, and the market gapped lower, I should say. Watching is this gap way up here. Again, if we begin to try to claw our way back up to it, they're at 51.99, that 5200 area. That's where the 78.6 Fibonacci is. So again, are we going to establish this as a bottom with our bullish falling wedge? After hours, again, we're filling the gap and we're coming up to just above this level. Right that on the daily chart, again, you have the 50 and the 20 that are about to get a bearish cross. Here we have the support and resistance line right here. Again, it acted as support, acted as support, acted as support. We broke it here, and again, and then tried to get back above the 50 here. The 50 acted as resistance, and you drop below the support and resistance line. And again, we turned down off of it with the 50 period moving average. Now we're trying to get our way back above the 50 period. That's the green line right here. Got above it, drop back below it. And if we do establish a higher low, need to clear the cloud right here, need to clear the support and resistance line. Then you have your 200 up here, and then you have your gap fill up here at 5200. And right there at the 200, we have this horizontal resistance that's from this low and these lows right in here. That is the horizontal resistance level right there, and that's around the 5140 area, and our 200 period is around the 5150 area. Our gap fill is at the 5200 area. There's some things to be watching. Do we claw our way back up with earnings, or do we come back up? Just a larger counter trend that moves not down, and we still end up pushing down. So we'll be watching what signals look like by tomorrow's close. Getting a big rally in after hours on the earnings real fast. Here they are. Again, we're going to have the PCE inflation data tomorrow. We get a rally and then a sell-off with that, or do we just continue to rally? Is it a relief rally, inflation data, or does the inflation data come in hot? And again, we've seen inflation reports coming in hotter. We'll be watching what happens with the PCE data. Now, again, in after hours, we're getting Microsoft, Alphabet, Intel, Snap, just to name a few here. Really important earnings. And tomorrow we'll get that PCE before the market opens. Positive earnings, and I told you, again, we could claw our way back up on these earnings, try to establish higher low. We did do that today. We could claw our way back up if we can clear the 20 and the 50, start moving towards the 5200. So I'll be watching what happens around that 20 period moving average. But Alphabet shares are jumping 12% according to CNBC. Positive earnings and announcing a dividend. We got Microsoft earnings, and Microsoft beat the earnings estimates. Positive news with cloud growth accelerating. Snap reported, and shares are up 26%. Strong revenue growth beating on earnings here. But Intel providing a weak forecast for the quarter, and they beat on earnings but missed on revenue. Intel down on earnings by $3, down 8.59% right after the bell here. Alphabet jumping nearly 13% after being down for nearly 2%. Nearly 2% there for the session, but up 13% in after hours. So Alphabet up in the Nasdaq and S&P. Microsoft was down nearly 2.5% for the session, but in after hours they're up 4.25% on earnings. So Microsoft up just over 4%, Alphabet up nearly 13%, Intel down over 8%, but Snap was up. Snap was the big winner, up nearly 25%. Look at that, 24.91% in after hours on earnings. And prior to earnings, they were up 2.89%, so a big win for Snap. And all of this helping Nasdaq and S&P 500 higher, filling the gap in after hours, and then again watching to see what happens by the time the PCE data is released tomorrow morning. And here's the S&P 500 daily chart. I told you yesterday we had that bullish green bar. Now it's time to be watching. Again, do we just get a counter trend and come up here and get some kind of counter trend and then another dump that starts taking us beyond the slow, or maybe something bigger down towards the 200 period moving average? Or do we get a bullish reversal of conditions and try to clear the moving averages, the 20-period moving average, which we've been getting rejection. We dropped below it here. We tried to get back above it, stalled at the 10, dropped back below the 20, and we've been getting rejection at the 10 and 20. Here we get rejection at the 10 after dropping back below the 20 and getting rejection at them as they got a bearish cross. Again, do we give something like this where we try to establish a bottom, claw our way back up? If we can clear the 20 period, then you've got a shot at doing that. If you come up here and earnings just take us up here and we get rejection at this area, or maybe we fill the gap and by tomorrow morning, fill in the gap and we're getting a gap and trap by the tomorrow morning with the PCE data if it comes in hot. Said it's supposed to be mixed. The headline number is supposed to be higher on a year-over-year basis, but the core number is supposed to be lower, and the month-over-month is supposed to be 0.3% for both over-month basis. And we're getting some green here that's giving us some momentum. Watching by the close, does the cloud turn back to bullish? Not. Do we get a rally and maybe a topping tail or something, and we sell off the PCE data? We'll flirt with this low over here. Try to, again, get that rally I talked about back up to fill the gap at 5,200, which means we've got to be able to clear the 20 period and the 50 period moving average. Now, the 50 period here is at 51.22. The 20-day moving average is right above it at 51.23. They're about to get a bearish cross and a bearish realignment of the moving averages. So those levels could halt the advance. It's just a short-term counter trend and we get another dump, and we go higher and we get another dump, or trying to establish a bottom, or again, can this low hold? We've now established a higher low. Can we clear those moving averages? Can we get the bullish reversal conditions by tomorrow's close? We're watching the gap directly overhead and the last minor high, again, our hanging man candlestick, but if we clear it, you've got the moving averages. Overhead, we have the red dots of resistance, so we'll be watching to see what it looks like by tomorrow's bar. Yet for the Nasdaq, may get it by tomorrow because again, futures are rallying. We'll see what the market does with the PCE data and how that. And again, in after hours, we're coming back up and trying to fill the gap here and testing the peak right here from yesterday's high. So that's where we're at with the Nasdaq. We don't have a bullish reversal of conditions yet. After hours, the S&P is trying to get it, but again, it's on a closing basis. But both Nasdaq's getting the green bar in after hours. We'll see what it looks like by tomorrow's close with our PCE data tomorrow morning. Now, right now, Nasdaq is testing the high in after hours, coming back and filling the gap here and testing the high. If the rally gets bigger than that, again, we have the support and resistance line here. We have the 200 period up here, and this is the 400 period. But some moving averages of resistance, and then you got the upper cloud. So again, I'll be watching. If we can rally, then you've got these moving averages over here. You have the 20 period moving averages and the daily time frame. The rally end up fizzling out with the PCE data. It doesn't. Is it a counter trend rally? And this is resistance on Nasdaq right here, just below the 200 period moving average at the support and resistance line there, just above it. This horizontal level and the 200 period and the support and resistance line. Nasdaq still stalling at the 10 period moving average in the at the close here, just underneath it. We've got a hollow red candlestick, and again, we're still holding above Friday's low there. But after hours, we're filling the gap and coming back and testing this high. So if the rally can continue, again, we have moving averages. The 200 period moving average, 100 period moving average directly overhead in the intraday time frame, and the support and resistance line here. We have the 20, which has already crossed the 50. If we end up getting a bigger rally, the 20 is resistance. And again, is it just a bigger counter trend rally, or can we build upon it and try to go up to the gap fill, which is way up here near the highs from 1 month ago? See that gap here on the 60-minute chart way up here. If we can end up clearing overhead resistance, if we can clear support and resistance line, the cloud here, and our 200, 400 period moving average, then way up there is a gap fill, and our triangle, lower boundary of the triangle, is just above that 50 period moving average. If we try to back test it, again, we'll be watching. Is this amount to something bigger, or is it a counter trend? Is the move not done to the downside? And if it's not, you've got your 200 down here. which again is coming in low 16,000 area. Nasdaq, before all is said and done, could still end up forming a divergence on the RSI in the 60-minute time frame. So again, we'll be watching what happens with today's rally. Establish a bottom, or is it a counter trend and we still go lower? It does establish a bottom. Where are we headed? Back up to fill the gap up here, or are we going to try to make new all-time highs? So again, if signals all begin to turn back to bullish, then we're either getting a powerful counter trend or trying to establish a bottom. If I bring it up close here, the Nasdaq daily chart, again, got a hollow red candlestick today. Again, right now in after hours, we're right here. If we can climb higher, you've got your 20, your 50, and the broken trend line. You've got your 20 period coming in near the horizontal resistance of that rectangle where we went sideways for 7 weeks. So again, we back tested it immediately when we broke down. Could be that we try to back test it again. If we get a bigger rally right here, right now, if we just fill this gap here by tomorrow, the rally fizzles with the futures, then again, we still may head on down here to challenge this low. So we'll be watching for clues, but signals are still bearish, and we still have the moving averages pointing down in a bearish arrangement. We'd have to see things begin to change, get back above the 10 period and hold above it. Right now we're getting rejection off the 10 period on Nasdaq so far. S&P dropped below it on an intraday basis and closed right just above it, pointing down. So we've got to be watching to see, can we establish Friday's lows as a bottom? There's more work to be done. So just some things to be paying attention to. But a powerful rally in after hours. We'll see what happens by the open tomorrow with the PCE data. Close, do we open strong? The rally fizzle out the PCE data, which is going to be an hour before the market.